Now, what are the functions of the capital market? So we are coming to the next topic called functions of the capital market. First function is to mobilize the resources. Mobilize the resources. Second function, facilitate buying and selling of securities. Third, facilitate process of efficient price discovery. Then, fourth point, facilitate settlement of transactions in accordance with the predetermined time schedules. Okay, so these are all the functions of the capital market. Now, next important topic, this capital market has some bifurcations further. Capital market is further divided into two parts. What are they? Primary market and the second is secondary market. Now, what's a primary market? Primary market simply refers to the market where new securities are bought and sold. So what is it? New securities are bought and sold for the first time. So first time you are introducing the securities, it goes only to the primary market. Now this is also called new issues market or IPO market. First public offering of equity shares or convertible securities or which is followed by listing, that is called IPO. Now the primary market also includes further capital by companies whose shares are already listed. So what is an IPO? First public offering of the equity shares, then it is followed by listing of the shares. So first is the public offering of shares, followed by listing of the shares on the stock exchange. This is called IPO. Now come to the second part, that is called secondary market. Now secondary market is a market where the investor is purchasing from another investor. Remember, in the primary market, who is involving? The company itself is involved, that is issuer itself is involved. In the secondary market, there is no issuer, it is investor to investor. Now this happens after the, so when will the securities come to secondary market? After it is introduced in the primary market. So first the issue will be, the security will be issued in the primary market, thereafter it comes to the secondary market. So secondary markets are called stock exchanges and OTC market. What is it? Over the counter market. Now securities are transferred from one holder to another. We say they are doing only in secondary market, not in the primary market. So what are the differences we can conclude by the way? First, primary market and secondary market. First, in a primary market, it deals with new securities. That is, they are not previously available, offered to investing public for the first time. First time securities. Secondary market, it is market for old securities. Meaning the securities have already been issued and granted stock exchange quotation. Stock exchange therefore provides regular continuous market for buying and selling of these securities. Third point, See, the financing is the third point. Primary market is providing additional funds to the issuing companies. So who is getting funds out of the same? The issuing companies. For what? For starting a new enterprise or expansion or diversification, etc. So the financing here is said to be direct. Now come to secondary market. What does secondary market do? They cannot supply additional funds since a company is not involved in the transaction. So what is it? They cannot provide additional funds. So here who is doing the transfers? The transfers are done by the common people over here. So the role regarding here is indirect in nature. We say the financing here is indirect to the company. How? See, when there is a constant buying and selling of securities, what happens to the company's securities? They are liquid in nature. So this particular market provides the liquidity to the securities. Then next one, next point. Primary market is having no physical existence. It is not rooted in any spots. It has no tangible form either. It is recognized only by the services. However, secondary markets have physical existence and they have geographical location as well. So these are all the differences between primary market and the secondary market.